Hello and welcome to another Daily Dose of Insights powered by Container Exchange. My name is Christian, and every other day we bring to the key news, stories, and data points that move container markets and hence your business. Today it's Friday, so we have Fundamentals Friday. We typically pick one or maximum two topics to talk about and give you a little bit of food for the weekend, so to speak. Let me quickly share my screen to give you some guidance of what I'm talking about. Key graph here is our xChange Container Sentiment Index, where we essentially track on an ongoing basis the industry's expectations with regard to container price developments. If this index trades above zero, this means that the majority of industry professionals expect an increase in container prices in the upcoming weeks and months. If it trades below zero, the overwhelming majority expects a decrease in price. And as you can see, just last week, this index increased to an all-time high of 71 points. So almost exclusive positive sentiment here in the market. And of course, that's driven by the tensions in the Middle East, the attacks by the Houthis on commercial vessels, especially container vessels, in the Red Sea, or at the entrance of the Red Sea. And of course, that will also remain in focus in the weeks to come. The big question, the million-dollar question, of course, is how long will this last? We've already said and positioned that we don't believe that if this level of tension and this level of diversions of tonnage around the Cape of Good Hope persists, we don't believe in a long time uptick or increase of freight rates and container prices, just because there's so much capacity in the market that can easily absorb this shock. So what we see right now is an acute reaction of the shipping industry to those diversions, to those tensions, to that uncertainty, which pushes up freight rates, which pushes up container price expectations, and of course container prices itself. But this will balance out as long as there are no further escalations in the region. And just this morning, the US and the UK have attacked Houthi infrastructure on land with airstrikes, essentially highlighting that there is a risk of escalations, maybe not yet boots on the ground, but at least airstrikes, not just prevention of attacks. And that ultimately poses the question, how will Iran react? And with Iran, also other countries that pursue the same interests or similar interests, and that might also be now closer aligned in terms of political measures, because they've increased the BRICS group of nations, which used to be just Brazil, Russia, India, China, and South Africa, now also includes Saudi Arabia, Iran, Egypt, etc., etc. So definitely countries with specific interests in that regions and geopolitical interests worldwide. If, for example, there's another level of escalation in the Strait of Hormuz, which is home to a significant part of global oil trading or oil transportation, then that will also have significant impact, for example, on oil prices and thereby GDP developments, inflationary developments all across the world. So just a little bit of food for thought for your weekend. Interesting topic, albeit not the most pleasant one maybe to think about. This is it from us for today and for this week. Have a fantastic start into the weekend, and see you all on Monday. Take care.